Hi guys, welcome to another episode of SCN. On today's show, we're going to be talking about the grudge purchase that is car insurance. And to end off with, we're going to be showing you a million reasons why you do need to keep those cars of yours insured. Now, car insurance is a grudge purchase. I know it's something that nobody likes to have to pay for, but understand 50% of South African road users out there are uninsured. Now, if you're driving around in a financed vehicle and it's not insured, that is against the law. So do yourself a favor, get that sorted out. On the other hand, if you're driving a vehicle that's completely unencumbered, if it's a car that you've bought yourself and you haven't insured it, I think you could be a bigger schmuck. You've worked hard to get that car paid for, and now you're driving around with an uninsured vehicle. Think about it. The car's going to get written off and stolen. If it happens, you've got to go all the way back to the start and start saving all over again. Now, there's a couple of insurance products you may be familiar with, and there's a couple you may have never heard of before. The most obvious is short-term insurance. This is the insurance we've just been talking about. This will protect your car in the event of it being written off and or stolen. Your insurance company will pay out in the event of a claim. The other policy you may be aware of but haven't taken on your car is mechanical warranty insurance, breakdown insurance. Now, how this insurance policy works is the following. You pay an amount of money for an insurance policy. They normally last 2 years, 40,000 kilometers or unlimited mileage depending on the policy, and it will cover you in the event of mechanical breakdown. Clutch packs up, engine packs up, any of those issues, they will pay towards getting the vehicle repaired. Also nice to know you've got that backup if something happens to your car. Now, there are lesser known insurance policies out there that you really do need to have a look at the next time you're buying a car. And again, whether you're paying cash or financing. The first of those is the gap insurance. Now, gap insurance does exactly as it says on the tin. It's the difference between what you paid for your car and what the insurance company will pay you out in the event of it being stolen or written off. So let's using the example that you buy a car for 250,000 Rand, you drive it for a year, it gets stolen or written off, the insurance company offer you 200,000 Rand for the car. Now the difference, the 50,000 Rand, is what the gap insurance will pay. They will pay you the difference between what the insurance company paid you and what the value of the vehicle is to you. The other great policy that you need to have a good look at is return to invoice. Now, return to invoice will get you back to exactly what you paid for your car on the very first day of purchase. Now, what this means is this. If you buy a car for 250,000 Rand, you drive it maybe for 36 months and the car gets stolen or written off, they will take you straight back to invoice, return to invoice. Now, this policy is absolutely bulletproof, except it only lasts for 36 months. They will not pay out over the 36-month period. You cannot get return to invoice after 36 months. Now, the deposit protector is another product that, again, does exactly what it says on the tin. It protects your deposit. So using this scenario, you're financing a vehicle for 250,000 Rand, you're putting down a 50,000 Rand deposit. Clearly, this policy doesn't work where you're paying cash for a car. You put a 50,000 Rand deposit down, your car gets stolen or written off any time during the course of this policy, you will get refunded the amount of money that you put down as a deposit initially. So that money gets paid out to you by the insurance company, and that money can be put towards the purchase of your next car. Now, the retrenchment policy is a policy I'm sure you've been offered before. It's quite a complicated policy. Let me give you a very quick overview. In the event of you being involuntarily retrenched, meaning that you do not leave of your own accord, you are fired, not fired, your job is no longer available to you, the policy will kick in. But there are a few exclusions. The first one is this. You must have paid for a minimum of 90 days before that policy actually kicks in. So you can't start in January and then claim in February or March. You start paying for the policy in January, February, March, you are able to claim at the end of April on that policy. And the other thing is this, the policy will only last for a maximum of 6 months or until obviously you find gainful employment. Now, like any insurance contract, you need to read the T's and C's. Exclusions are all over the place in terms of what the policies will and won't pay. So read those T's and C's real carefully. And this is just another reason why you need to make sure your car's insured.
Уже так и так.
I'm hoping some of these guys took out a policy or two that we've been talking about. Thanks for watching, guys. Don't forget to smash that like button. Check out the original video on the links below. Like us on Facebook, follow us on Twitter. I've been Nick. It's been real. I'll see you soon.
Surf4Cars.